Okay, welcome once again to part B of our income statement and trade and other receivables. Okay, last time, let's go back to our answer book. Last time we ended by calculating the gross operating income. Now we are supposed to move on to the operating expenses and hopefully we'll finish up to the net profit for the year. Okay, so we have got discount allowed here. Let's go back to the other information. We have got salaries. We have got salaries and wages. Okay, the salaries and wages. Okay, the salaries and wages that are given here, they are 175,000. Do we have an adjustment for salaries and wages? Yes, we've got adjustment here. Number 14? Well, okay, whereby they are saying that okay, the details of an employee were left of the salaries journal for February 2022 as she was on leave. Yet details are as follows. So this was omitted. It was not recorded. So what we are simply supposed to do is to record it. Okay, when we are adjusting our salaries and wages, we adjust them at the gross salary. We are only going to take the 8,000 for the gross salary. Okay, fine. Let me show that on the answer book. So we are going to say salaries and wages. Okay, we are going to say 175,000 plus 8,000. That is the only adjustment that we have for the salaries and wages, which is going to give us 183,000. 183,000. Okay. After the salaries and wages, we also have got the pension fund contribution. The pension fund. Okay, contribution. Okay, let me open a bracket. The amount that is given for the pension fund contribution, okay, is given here is 24,500. 24,500. Okay, 24,500. And then we are also supposed to say plus the amount which was not recorded there, which is if I'm not mistaken, it's 540. 540. Okay. If we add 24,000 plus 540 for the pension fund contribution, we get 25,040. 25,040. We also have got the skills development levy. The skills development, okay, levy. I'll just write L. Okay, we open a bracket again. The amount that is given there in the pre-adjustment trial balance is 9,900. 9,900. Okay, if you look at the information that we are given here, they are saying that the employer contributes a rand-to-rand base on a rand-to-rand basis on the pension fund and 1% of the gross salary to the skills development fund. Which one is our gross salary? 8,000. So we're supposed to say 8,000 times 1%. It is going to give us 80. Okay, 1% of 8,000 is 80. So we're going to say plus 80. Yeah, okay. It will give us a total now of 9,980. 9,980. After our skills development levy, we also have what? Stationery. Okay, the stationery. Okay, the amount that we are given on the pre-adjustment trial balance, we are given 4,700. Okay, the 4,700. Okay, we have got an adjustment for stationery. It's adjustment number 7. Partner A Boots paid 420 for his son's stationery. This has been recorded as stationery in the business account, is it? It is for personal. It was maybe more or less like supposed to be treated as drawings, but it was treated as part of our stationery. Okay, we are supposed to do what with that amount? The 420, we are supposed to remove it, is it? It is not a part of the stationery that we need. Okay, that we are supposed to be recording in our income statement. It's not a part of our stationery. So we're going to say minus 420. Okay, and then we also have to check, did we have any stationery that was left on hand at the end of the financial year? Let's go back again. We have got adjustment number 9. Okay, number 11. Okay, there's stationery here on hand. Okay, which is 700. Okay, what do we do with an amount on hand? We minus what is on hand. Okay, so we say 4,700 minus 420 minus 700. We get something like 3,580. 3,580. Okay, what else do we have? We also have got the bad debts. Okay, the bad debts. the bad debts we had, okay, an amount given in the pre-adjustment trial balance for bad debts is 6,550. 6,550. Okay, remember we have got a bad debt on adjustment number. It's adjustment number. What was adjustment? The adjustment, it was adjustment number 3 of a debtor who left the country. This is a bad debt which was written off a new one. So our bad debts are increasing by 300. So we're supposed to say plus 300. It will become 6,850. 6,850. These are now our new bad debts. Okay, fine. What other expense do we have? Besides the bad debts, we also have got insurance. Okay, insurance. Okay, the insurance that is given there in the pre-adjustment trial balance. Let's look at the insurance. We have got 5,400. 5,400. And the adjustment on insurance, we have got an adjustment number 10. The annual insurance premium 5,400 expires on 30 June 2022. Okay, this is simple. What we're simply supposed to do when it comes to insurance is to say, okay, when is our financial year ending? 28 February 22. Okay, but they say the insurance stretches to 30 June 2022. Okay, so our financial year ends here, but the money for insurance stretches to 30 June. So it means all the months after 28 February are giving us what? The prepaid expense. Okay, the prepaid expense. So we need to count the number of months from 28 February to 30 June. So we're going to say we have got March, we've got April, we've got May, and then June. So it's 1, 2, 3, 4 months. There are 4 months that are prepaid. So we're going to say the 5,400 multiplied by 4 months over 12, which is going to give us 1,800. So 1,800 is our prepaid expense. Remember this 1,800 when you are doing your trade and other receivables. Okay, when you do the trade and other receivables, they are supposed to be a part of the trade and other receivables. Okay, we are done with this. So what do we do with an amount that is prepaid? What is prepaid is supposed to be subtracted. 1,800. So 5,400 minus 1,800, we are going to remain with 3,600. 3,600. We also have another expense for water and electricity. Water and electricity. Water and electricity. Okay. The amount that is given in the pre-adjustment trial balance for water and electricity is 7,200. 7,200. What about the adjustment for water and electricity? What are they saying on water and electricity? Let's look at all the adjustments that are given. Where do we have water and electricity? Okay, here we've got, okay, the following accounts have been received on 20th February but not yet paid. Water and electricity is not yet paid. It means it is owing, is it? It is accrued. 560. What is accrued? What do? We add. Okay, so we're going to add 560. 7,200 plus 560. We are going to get 7,760. Okay. What else do we have? Let's check our expenses. We also have what? The telephone bill. Okay, the telephone amount. Okay, that is given there. The telephone amount that is given is 30,750. 30,750. What about the adjustment? Okay, also on the same place. Okay, we also have got the telephone for 4,670, which is accrued, is it? So what is accrued? We add 4,670. And then the final amount there that we have is 35,420. 35,420. Do we still have any other? We also have what? The depreciation. The depreciation. Okay, it was also given, I think. Okay, let's look at the amount for depreciation that was given there. Okay, where is our information? We have got depreciation. It was given. I remember looking at it. Okay, information for depreciation. Okay, depreciation. Okay, provide for depreciation 13,458. 13,458. 13,458. Do we still have anything else? Here now, that's where you check the trading stock also deficit. Okay, the trading stock deficit. Do we have? Okay, yes, we do have a deficit. Let's check trading stock deficit. Okay, trading stock deficit. Okay, let's check the trading stock that is given in the pre-adjustment trial balance. There it is 72,000. The opening stock is 72,000. Okay, what else affected our trading stock? Remember that adjustment where there is a new data, the adjustment number, a data returned goods with the cost price. These goods were returned, so if they were returned, it means they were added back to the stock that was already there. Okay, so we are going to say plus 450. We take them at their cost price, and then we say minus, what are we going to subtract? The stock on hand. Okay, the stock on hand, trading stock 68,000. We say minus 68,000. It is going to give us an amount of, okay, let's subtract, it's 4,450. 4,450. This is our trading stock deficit. Okay, so far, from what I can see, these are all the expenses that we're supposed to record. Now we can safely add all the amounts to get the total for our expenses. Okay, so when we add all the expenses, we are going to get something like the operating expenses are it's 306,738. 306,738. 306,738, and we put brackets, and then now we say gross operating income minus the operating expenses to get our operating profit. Okay, so our operating profit after subtracting our operating profit now is 122,748. 122,748. This is our operating profit. After the operating profit, we record our interest income. Okay, our interest income. Okay, let's go back to our information. Okay, if we check, okay, the question was actually a very interesting question because most of the amounts were just given in the pre-adjustment trial balance. We've got interest on fixed deposit, interest on savings, and interest on current account. We are supposed to add all those incomes, is it? So it's 2,750, 2,750 plus, okay, the 820 plus 820 plus 820 is for the savings, and then interest on current account is 240 plus 240. And remember also we had that adjustment that we did for the debtors control. There was a customer who was charged interest on an overdue account for 40 rand. Okay, it was adjustment number 1. Is it? It is to be charged 40 rand interest on overdue account. Is it? That is also another interest income. Okay, so when we add all our interest incomes, they are going to give us 3,850. 3,850. We add to the operating profit to get an amount of 126,598. 126,598. This is our profit before interest expense. So now we record our interest expense. Our interest expense. Okay. For the interest expense, I'm just going to show you the simplest way to calculate it. Let's look at the information that we are given. We are given information on number 4. The loan statement was received from Absa and the following. We've got the balance at the beginning, the repayment during the year, and the balance at the end. Okay, this is how you calculate this. You open your bracket, you take the balance at the end. The balance at the end is 125,000. You add the repayment. The repayment is 40,000, and then you minus the balance at the beginning. The balance at the beginning was 145,000, and you get an amount of 20,000. Okay, 20,000 is our interest expense, and then finally our net profit now for the year was 106,598. 106,598. Okay, so let's look at everything. This is all for our income statement from the beginning up to the end. Guys, if you look at how I was recording, I was doing my calculation in these brackets. This will help you to get those part marks. Do not just go straight to writing the answer. Also show the calculations in brackets like what I was doing. Doing all this was going to earn you a good 42 marks. Okay, thank you. The only thing that is remaining now is the trade and other receivables. So I'll do the trade and other receivables in part 3 of this question again. Okay, thank you.